How's it going, everyone? It's Sam. This has been a really interesting time over the last year for investors. A lot of young investors are starting to see fixed income investing actually paying out a decent amount for the first time. However, other investors continue to invest in dividend stocks. They would rather continue to buy good quality companies instead of investing in something like a CD or savings account. I have this dividend portfolio that I've been building up for the last 3 years. This is not my main portfolio, but I set aside a specific amount every single week to invest in this, and I have not wavered. Even though on the same website, it pays 5% APY just for a savings account. No minimums, no maximums, nothing like that. Now, I want to talk about why you might want to invest into a dividend stock or dividend portfolio instead of investing into a savings account, even if it pays less of a dividend or less of a yield. Because right now, my highest dividend payer pays about the same, maybe even a little bit less than the savings account. My lowest dividend payer pays 0.5%, maybe lower than that. If you don't mind, hit subscribe, turn the bell notification so you can see future videos just like this. I cover a lot of different things in finance, from macro to crypto to growth stocks, the dividend stocks every once in a while too. But today I want to talk to you about this portfolio. I have been building this up over a long time. I've been telling the Patreon every single week when I've been buying. There's a link to the Patreon in case you want to see that. And I've been saying exactly what I have been buying. Now, I've not always been in the green on this. For a while there, when the market was hit really hard, I was actually red. Now, it's looking pretty good again. It's pretty smooth overall. Keep that in mind. This has been over a long time span since July of 2020. So I guess not the longest time span, but about 3 years, I've been consistently investing $100 to $150 into this portfolio. I upped it partway through because I wanted to invest a little bit more. Throughout this time, I've tried to buy companies that are solid companies that I did not have to look at every single week. I'm not trying to buy some high-yielding company that happened to fall down after earnings that may or may not recover. I'm just buying high-quality companies that I think have a deep moat, very hard to compete with, that have good economics, that bring in large amounts of cash flow, that try to reward investors with dividends and share repurchases, continue to grow their top and bottom line, continue to reinvest money in a good manner that gives them a good amount of return on that money. So there's a lot that I'm going for there. I'll show you on a chart what that looks like. But at the same time, I'm seeing all these deals come out. I have a couple different banks that are reaching out to me. Hey, we have this 5% CD, 5.5% CD. This app that I use, M1 Finance, offers 5% APY. And a lot of people might be thinking, okay, why would I invest in a dividend portfolio like this one? It probably pays 2.5% or 3% instead of just getting the solid 5% APY. Why would I invest in stocks where they can fall down? I can actually lose some of the value of my money and also get paid less the whole time to invest in it. Right now, my dividend portfolio pays 2.59%. So in a lot of people's minds, it's not worth it, right? It's barely more than the VOO, which pays 1.5%. However, I will say that there is a huge difference. There are a couple of huge differences between buying a savings account or putting money into a savings account and buying a stock. Let's take a look at one of my top companies here, Texas Roadhouse. They have been a growth beast. Over time, they've been consistently able to grow revenue, continue to grow cash flow, continue to up their dividends. As you can see here, over the last 10 years, they've been able to compound their revenue at 12% a year. They've been able to compound their cash flow at 15.8% a year. Net income has gone up. EPS has gone up. They've been able to continue to increase dividends. So over the last 10 years, they've increased 16.44%. So just keep this in mind. I bought in 2022. I was getting paid 46 cents a quarter in dividend. So almost $2, like $1.80, $1.86, something like that. And now they're paying 55 cents every single quarter. So they increased this dividend significantly, 9 cents on 45. So basically an 18% dividend raise. And they continue to do this, right? This is going up pretty exponentially. So buying a company like this, you're buying into a corporation that is trying to continuously reward shareholders through dividends and share buybacks. So this increases earnings per share, increases dividends per share. Compare that to a savings account. A savings account, 5% APY. So I put in $100, I get $105 at the end of the year. The next year, I get $5 more plus 5% on that $5 I made the year before. So you're making small incremental gains. It compounds a little bit. Compare that though to something like this, where the dividend starts lower, but it's compounding at 16% a year. If something starts with a dividend, or a stock starts with a dividend of 2% and compounds at 16%, like Texas Roadhouse, for 6 years, that's about the break even where you start getting about a 5% yield on cost. Keep in mind, over this entire time, they're also probably going up in price. I mean, that's what the price of Texas Roadhouse has done over the last 5 years. You've gone from a $67 stock to a $115 stock. So not only are you making dividends every single year, those dividends are compounding on one another too, which I didn't even account for in this, but also the price has gone up about 50%, over 50%, 60, 70%. So there are a couple different things that are so good about buying stocks, right? There are a couple different reasons you might want to buy a dividend stock, a dividend paying stock, as opposed to putting money in a savings account. Keep in mind too, I think you don't want to try to time the market too much, but if you put your money in a savings account, eventually they're probably going to lower it. The Fed has talked about probably decreasing rates at some point, which when the savings accounts and CD rates go down, typically stocks do better. People aren't putting their money into high yield savings accounts. They're putting it back into riskier assets. So if you put your money in a savings account at the same time that the rates are going down, let's say it's 4.5% or 4%, 3.5%, keeps on lowering and lowering and lowering, that's the same time that the price of stocks will probably be moving up. So you can put your money in something like a savings account for a couple of years, make 5%. So let's say you do it for 2 years, you make 10.5% or 10.2%, whatever that will be. You can make that, or you can invest it into a stock, and then it probably appreciates significantly more, and you get paid a dividend on top of it. And you don't try to time that where, the savings accounts don't pay as much, and then the price of stocks is going up at the same time, where it could just wipe out all the gains you just had, essentially. So it's an interesting problem trying to time that out. So that's something I'm considering when I'm buying dividend stocks. They continuously raise dividends. They continue to become more and more efficient, continue to grow. And I don't think a savings account can keep up with that kind of overall gain. Now, of course, there is more risk when it comes down to stock investing. You have to know what you're doing. I don't try to chase yield. I don't try to chase whatever pays the most. There's also a side to it that's just fun to invest in these types of companies. It's cool to invest in the companies that you like to buy, or you like to use their products. Something like Vici, who owns a lot of the real estate in Vegas, has things like this happen. They own the land that this is on. This is the Sphere. And they've been posting so many videos about this. There have been so many people talking about this because it looks so nuts. They have so many cool different things they can do with it. Like the world, they can put eyeballs on it. They can turn it into basketballs. It's just cool to be part of this kind of thing, honestly, which you could just go enjoy it. But the fact is that there's just a lot of upside and it's fun at the same time. So there are a variety of reasons you might want to invest in a savings account versus a dividend portfolio. Personally, I'll be honest, I actually have more money in this high yield savings account than I do in the dividend portfolio, but it's because I'm holding it for real estate. I just sold a house. So instead of just going and throwing it all into the market at one time, I am trying to invest in other places outside of the market, outside of the stock market and the crypto market. I'm trying to invest in real estate. So you do need some cash for that kind of thing. Now I could just go throw it in a Dividend account in the short term, but I don't know if that's the smartest thing for me personally. So just keep that in mind. It is personal. Investing is personal. So make sure you do your own due diligence. Make sure it fits your risk profile and your goals. I will continue to invest in this dividend portfolio and show you how it goes over time. Thank you so much for watching this video, and I'll see you in the next one.